Good morning, afternoon, greetings to everybody from anywhere they may be around the world. I will be making somewhat of a longer video today, and this is because I'll not only be going over the week that was and the week to come, I'll also be going over the basics of the ICT 2022 model, which I think I should begin with before going over what I'm looking for next week. So the ICT 2022 model basically says that we outline significant liquidities, and then look for a liquidity sweep before a market structure shift, and then a re-entry at the fair value gap that's created at the market structure shift point. So let's assume this was what we had in price, right? I think everyone can agree that this area over here would be considered our sell side liquidity, the lowest point of this piece of price right now. We can also agree that this point is the highest point of price right now, so we can consider this to be our buy side liquidity. So our highest point is our buy side liquidity. We can stretch it out or leave it whichever way you prefer, and then this would be our sell side liquidity. So ICT's 2022 model basically says that we look for a liquidity sweep. So let's say price trades lower and then finally sweeps buy side, right? This is the first indication. This is the first tick off your list of the 2022 model. So we got a liquidity sweep. The next thing we're supposed to look for is a displacement to the opposite direction. So displacement to So we look for a displacement to the opposite direction. A displacement essentially is a move that happens rapidly, especially compared to how we got to the first place. So this, in other words, would not be a displacement to the opposite direction. Price trading lower slowly until this point. A displacement is going to be something that looks like this from that point and then immediately sweeping the lows. So this is a displacement. Once we've gotten the displacement that we're looking for, we now validate a market structure shift. I have already covered it in a previous video, but I'm going to do it again here. So a market structure shift happens when we have a swing low. In this case, we have a swing low, right? When this swing low has been not only swept, but a candle has closed below this swing low, we can validate this to be our market structure shift. Again, many might not know what a swing low is, so let me just give a quick vague depiction of a swing high and a swing low. So a swing low is essentially made up of 3 candlesticks. Any low that has 2 candles to each side of it that are higher than the lowest one in the middle, that's a swing low. And a swing high is basically the opposite. It does not have to be perfect, but as long as the middle candle is higher, the middle candle's high is higher than the 2 to the left and right of it, then it's a valid market structure. It's a valid swing low. An example of this on the charts would be, let's look for one in price. So you can see this candle here, right? We can see the high is sitting there. Looking to the left of it, this candle is lower and this candle is also lower than this high. So this makes this a valid swing high. That's a valid swing high. And then swing low is the opposite. So in this case, we have a valid swing low. We have this candle low. Look to the left of it, we can see it's higher looking to the right of it, we also have a higher candle, so this makes this a valid swing low. So that's a swing high and a swing low. I know many of you may already know what a swing high and a swing low is, but I said I'm going to break it down as much as possible so that anyone that might not know what I might be explaining in this video would fully understand. So a market structure shift happens when a swing low has been swept and we got a candle close below that swing low. So what I use as an entry would be a fair value gap, right? That's the easiest entry. So we have an entry to the opposite direction with a fair value gap. But in my case, I can also use a breaker. I can also use a mitigation block. I can also use an order block and so many PDRAs, but the most common one and what ICT teaches is that we use a fair value gap as an entry. Of course, sometimes you might find an inversion fair value gap instead of a simple fair value gap, right? So let's just focus on the fair value gap one. Again, if you're watching this video, I'm assuming you already know what a fair value gap is, but if you do not know what a fair value gap is, please do ask and I will make a separate video just explaining that. So we are going to assume that we have some sort of fair value gap in this portion of price. Our entry now becomes a trade up. When price trades up into this, we take it down to the sell side liquidity. So that's this in a nutshell is the 2022 model. So the setup would be something like this: an entry inside of the fair value gap and a stop loss being at the swing high that was swept, because we do not expect price to return back to this level, right? So this becomes our stop loss, that previous swing high, and our take profit being the opposite section of liquidity. So this would be the trade setup if this was a valid 2022 model. So I thought I should cover this quickly before going deeper in the video. So this is the model that I will be looking for: PDRA entry and then look for the opposite direction. So this is typically a BC, or in this case it's a CB, fair value gap. So let's move on to what the dollar has done last week and what we should be expecting on the dollar moving forward. On the dollar index, of course we had NFP in this previous week, but I was again looking at this long wick from this candle, measuring the 50%, which is a consequent encroachment. We have this white line, the 106.761. So I was looking for a closure on the daily charts, just like ICT also mentioned, looking for a closure above this level for us to be safe, or for us to really consider bullish prices on the dollar index. So of course we can see that we did not get that, and price also went up the opposite direction. We actually even closed below this weekly BC, making it a potential inversion fair value gap, and of course a daily fair value gap there as well, which I can delete now. But you might be wondering what this fib is measuring. It's actually on the monthly chart. On the monthly chart we can see what I'm essentially looking for. I'm looking for higher prices from anywhere within this area. We can see that we did not tag the consequent encroachment of this BC, this fair value gap, in a form of a buy side imbalance, sell side inefficiency. So I was looking to see if we could reject off of the 104.904 level to the upside on the dollar index. Of course we have not tagged that level, so we might see a little bit of bearish move to the downside before a continuation later on, probably in the second week of the month of November. But let's go down to the daily chart and see what has happened. So we can see the whole week we just sort of meandered around, creating these candles that are completely rejecting to where we opened up in the day. Then on Thursday, we gapped lower, creating a new day opening gap, which in this case has a liquidity void and a volume imbalance that ICT teaches. So let me also get rid of these illustrations, and we can see the weekly BC that I just mentioned that we closed below. We might see price potentially coming back to trade into it and rejecting lower. And remember, this blue line is the consequent encroachment of the monthly fair value gap. So if we do see signs of rejection on a 5-minute chart, if we do see some sort of a market structure shift on a 5-minute chart, or lower, we might potentially come back to this swing low and this swing low, which is 100% fill of the monthly BC. But of course, right now I will not be trading the dollar index, I will not be trading euro, I will not be trading the pound with the dollar. I wouldn't be trading any dollar pair more beyond the session or beyond the day. I would only be taking little scalp trades here and there and nothing to hold the whole week until or unless we get a 4-hour market structure shift to the upside. So again, I've already explained the 2022 model. So let's say we sweep these lows from last week, we displace higher, taking out an internal swing high residing here, coming back into a fair value gap. I'm possibly going to consider taking this back up to this buy side liquidity, of course targeting the liquidity void in here first before higher prices on the buy side. This is the only thing that would make me ever want to take the dollar index moving forward. Of course, I'm still bullish on this. So if we do see, say, a closure above this weekly BC, let's say we do not respect it for lower prices and we actually break above it like so, and let me have a better diagram. So let's say Monday opens, we create the low of week on Tuesday, we displace higher, closing above the weekly BC. I'm talking on a daily chart, by the way. Of course, it's a 4-hour chart, but still will do. So let's say we close above the weekly BC, we bounce on it again, we take a new high. At this point, I would consider this market structure shift instead. So when we have a market structure shift like so, after trading above the 50%, after even closing this massive NFP imbalance, then I would look to enter at the BC or fair value gap that will be created in this area for higher prices. So we have got the liquidity sweep on Tuesday, we got a massive rejection to the opposite direction. Whenever we do get a pullback into the range, I'll be looking for an entry to take the dollar to the upside. That's essentially what I'm looking for on the dollar moving forward. But actively trading it, I'm probably not going to focus on it intra week. I'm just going to be scalping here and there, but I will be trading exotics aggressively this week, and that's actually why this video might be longer, because I will be covering a lot of the exotic pairs that I have on my watch list. Of course, if you've been paying attention to my watch list, we can see that I have them, most of them organized on the right side of my screen. So that's what I wanted to announce. Of course, I've already broken down the dollar. I'm looking for higher prices still. I am not bearish in these markets. The only thing that would consider me to start becoming bearish again on the dollar index, by the way, my invalidation point essentially would be when we take out this low, which is August of 2023 low. If we sweep this low, then I would start considering bearish prices on the dollar. But for now, I'm not bearish. The reason I'm taking this low, by the way, firstly, it's the low that created the fair value gap. Remember, whenever you enter in a stop, whenever you have a fair value gap entry, you put it on the first or the third candle, right? Depending on whether it's a BC or a CB. In this case, it's a BC. 1, 2, 3 candles are the ones that creates the BC, and this candle is the first one. So I'm putting it at this low. It also allows for a possibility of us trading down into this order block before moving higher. We have a bullish order block residing there. We might see price come into it and push up from here. So putting a stop loss here, not that I have a stop loss of such, I'm not gonna be trading on a monthly chart, but this would be my invalidation point. Once we sweep these lows, not even a closure, just a sweep is enough for me to consider bearish prices from here, on the dollar. So yeah, this is all I'm looking for on the dollar index. I'm going to move on now to EURUSD. Even though we expect the opposite, let's see what the euro did in the previous week. Starting off with the monthly chart, we can see the exact same structure, the difference being that the euro was even more stronger than the dollar index on its own. Long term, I was still aiming for this monthly buy-side imbalance, this monthly inefficiency here, and we can see we now also traded into this fair value gap. When you measure the fair value gap, we can see already that we've passed more than the 50%, the consequent encroachment of this fair value gap on euro. And another thing to note is that above this fair value gap, we have the true year opening. Of course, those that might not know should check out Day on YouTube, DAYE, quarterly theory. Check out his quarterly theory. He teaches how this is essentially where we opened up in the year, the April 1st opening, and we may see price tap into this while the dollar fills the monthly fair value gap on its side before rejecting lower. So right now, same as the dollar, I am bullish on euro until we reverse. Of course, long term, I'm still bearish on the euro, but right now, going into next week, we may see a continuation to the upside to fill up this area and tap into the April 1st opening. So looking for the 2022 model, in this case, we can already see here we got a liquidity sweep, right? So this would be a sweep to me. Got a liquidity sweep. Let's clear this up a little bit. Got a liquidity sweep, a displacement to the opposite direction, and we actually took out a swing high in this case, right? We see a high with two highs next to it being lower. So this would be a valid market structure shift because we got this candle finally closing above it. So this to me would be a valid market structure shift. The next thing you would have been looking for now is a fair value gap. So let's say Monday's candles opens like so, and then Tuesday is gonna allow for this fair value gap to become valid, because if that's Monday's low, then this would be a BC for you to potentially find yourself buying EURUSD from. Of course, that's just a simple 2022 model that I covered earlier in the video. If you want to go on a lower time frame, you're probably going to see the same or similar structure. You can see this swing high was swept in this inefficiency here, which was NFP's. Actually, it's not the NFP's release, might be, but let's see. Yeah, it is within the NFP release on the hourly chart. So taking the trend and continuing to the upside, you may look for an entry within this inefficiency. If you're really looking for a lower entry, you can look to see if this other block or this mitigation block would be tagged in for higher prices. Another reason you could use to enter is to measure from the low of the day on Friday to the high of the day. Anything below the 50% is a discount for you to take the euro to the upside. Of course, if you want to use the OTE model, ICT OTE model, you can see the 61.8 and 68.4 levels are here, the golden zone. So anywhere within this area could be a perfect entry to take the euro to the upside. So we can set this as an alert of some sort to see if we'll get any opportunities within the week. So that's all I'm looking for on euro, and I've already covered everything that I want to see on the dollar. I'm still ultimately bullish on the dollar, bearish on EURUSD, bearish on GBPUSD, but short term we might be seeing more higher move before the displacement lower and continuation to the sell side liquidity that we've been targeting for the past couple weeks actually. So speaking of the pound, let's head over to GBPUSD now. Start off with the monthly chart. On a monthly chart, we can also see the same inefficiency like the dollar. On the pound, it's a lot bigger. It's a lot bigger than the dollar index. So let's measure the consequence encroachment for this. We have that and 50-50. We can see the consequent encroachment is the 1.24429 level, which we haven't also gotten into. On the dollar, we got close to it already, but the pound is still the weaker of the two sisters when considering GU and EU. So inside of this inefficiency, we can, well, personally, I'm looking at this. I was looking at this area, this bullish candle. I know it's not the last bullish candle before the move lower, but I was looking into this because inside of this area I could consider this an order block. If this was the last bullish candle before the displacement low, I would have considered this an order block, but it's not in this case. But because it's within the monthly sell side imbalance, I would have considered maybe taking selling opportunities from that area. On a weekly chart, it doesn't look like much, but still the same idea to push price lower. But yeah, long term I'm still bearish on the pound, and I would not be buying GBPUSD right now. The only reason I was considering buys on EURUSD is because EURUSD is the stronger of the two sisters. So when we get a market structure shift on this chart, on a 90-minute chart or 1 hour chart, I would consider taking I'll consider taking sells from here. As of now, I'm not going to touch anything, and we'll see if Tuesday can potentially create the high of the week. Yeah, going into next week and the weeks to come. So let's remove these for now. We can see the previous PDRAs that were expected for price to reach where it is right now. So let's clear this up. Same thing as always, I'll be paying attention to my 90 minutes chart, 1 hour chart and 4 hour chart, but I'll probably pay more attention to the 90 minutes chart. So this is what I would like to see. Since I'm still bearish on this, we might see Monday trades, we might see Tuesday trades. So Tuesday, I want Tuesday to be the high of the week. I want Tuesday to be the one to do the liquidity sweep for the week, get a displacement lower, a reaction on Tuesday that could give us a possible entry on Wednesday to take this to the sell side. I don't know if that makes sense, but this is essentially the 2022 model that I covered in the beginning. A liquidity sweep happens at this point. Call that a sweep, can be a total sweep, can be a liquidity sweep. We got a displacement that gave us a market structure shift, and assuming that this happened, this high was on Tuesday and the displacement happened going into Wednesday, or let's say New York session. So here we got our market structure shift, and at this point we probably have an order block, a fair value gap, inversion order block, inversion fair value gap, or any PDRA actually. But in this case, let's just call it a CB, sell side imbalance, right? We can consider this to be the market maker sell model because we got the initial consolidation in this area. So I'd look for something like this going into next week and the weeks to come on GBPUSD. Otherwise, I'm not really trading. I'm not looking for any buying opportunities. and I might not even touch EURUSD as well. Or rather look for sales on GU. So yeah, this is all I'm looking for going into next week. I'm still not bullish in these markets. I'm still extremely bearish, but I'll wait for a higher time frame market structure shift. So let's move on to the indices, starting with ES, E-mini S&P 500. Let's start with the monthly as the other asset class as well. With the monthly, I am still bearish in this market, and I know to many it might not seem that these targets, these sell side liquidities that we targeted on a lower time frame is realistic, but when you look outwards and realize that we actually are very high in this market, we're in an extreme premium in these markets, because this is the all-time data that we have on TradingView from 1997 to where we are right now. So I've been wanting to see lower prices on E-mini S&P 500 and lower prices on NASDAQ and of course YM as well, but right now I would have said we have the same CB, the same sell side imbalance as we have on the dollar index in opposing pairs, but in this case we have a inversion fair value gap here on a monthly time frame. I know there's a lot going on right now on my chart, but I'm zooming in so we can pay attention to one thing at a time. From this candlestick's low, high, to this candlestick's low, we have this fair value gap, right, in a form of a buy side imbalance. But the point when we closed below it with this candle and then this candle, it's now considered an inversion fair value gap to me. So I would like to see if price can use this area to reject off of and trade lower. I'm still ultimately bearish in this market unless or until proven otherwise. So going down to the weekly chart, which was the time frame I was paying the most attention to, we have this order block and we have this tiny fair value gap from this candlestick's low to this candlestick's high. I was looking to see if price could trade into this and move lower after sweeping the previous week's high, but of course we can see how we rallied and continued moving higher. We even closed above the 50%, the mean threshold of this order block, this bullish candle. Measuring it from the high to the low, we can see the blue line is the mean threshold, which is the 4365 level. We closed above it, so it's sort of screaming bullish price in this market. It's sort of saying that we might be trading higher soon, but again, I am not going to be the one trying to buy this up or until we get a proper market structure shift on a lower time frame. So let's move down to the daily chart. Last week I mentioned that I didn't even want us to trade into this fair value gap, right? We can see I also highlighted this order block and we just pierced through it like no one's business. So price was really bullish last week, and if we wanted to apply the same 2022 model to this, we can actually see that we have a swing low here that was swept. So let's highlight that actually so we can do the training exercises together. So we got a liquidity sweep here. We swept it and even closed well below it. We even swept these previous lows here, these sell side liquidities that we've been targeting for a while. And then now we finally got a displacement to the upside, to the point that we even swept this high, this order block, the order block's high that I was talking about. So here we can call this a valid market structure shift because we even closed above it. So right now the typical 2022 model will be saying let's wait for a trade back into this inefficiency and aim for this buy side. And to be honest, price may do that. We might look for a liquidity sweep. We might want to sweep this liquidity before continuing to the downside. You might wait for a liquidity sweep and then another 2022 model going to the downside, right? So this of course is a daily chart. There's no need for me to go to a lower time frame because it's the same thing. We just got a bullish expansion to the upside, and this would be the initial consolidation of the market maker buy model. but I'm not bullish overall in this market. And let's actually go back up to see what this high is on a monthly chart. So we go back to the monthly, and we can see this high is around the turtle soup here, this TS that we see there, and it's also within the monthly inversion fair value gap that we highlighted at first. So we might see price do something like so, sweeping this high and pushing lower. Of course, these arrows are just so steep, but yeah, something like that, sweeping these highs before continuing to the downside. Again, overall, I am not bullish in this market, but if I want to do some sort of intraday trades, as I've already mentioned, I am going to be trading intra sessions or intraday positions, and we might see something like so. Let's look for a piece of price action that depicts exactly what I'm looking for. So let's say at this point, right, I'm only trading New York session. We have the Asia session here, right, the Asia session high and Asia session low. We can see price went and swept the Asia session high, creating a market structure shift at that point, trading higher into this small inefficiency. I know it might not be visible, but there's a fair value gap there. We traded into that inefficiency, that's CB, and displaced lower to sweep the Asia session low. Exactly what I was saying that I'll trade into for going into this week. So the 2022 model perfectly shown here. After sweeping Asia session high with displacement lower, taking a low, closing below that low, and then we trade higher back into it before a continuation to the downside. I know before we got into it, we did already sweep the Asia session low, so I might not consider this to be the best entry, the best trade to take, and I might not even take it. So I'll be looking for something like this to the opposite direction next week. So over there we got this massive NFP candle. So let's say we have the Asia session doing its thing within this area, and then London session trades lower into this massive fair value gap from the NFP data release. I would like to see us trade into that, let's say on a Tuesday or during the London session. Then look for a push to the upside from there. Of course, the reason I'll be taking this push to the upside, as I've already covered, is from the higher time frame charts, where we might have a possibility of sweeping these highs before a continuation to the downside. So that's all I'm looking for going into next week. And of course, this is what has happened already for this week. The next and last one that I'll cover for the week ahead is NQ, the NASDAQ. So we have the exact same structure, the exact same move to the upside, the exact same analysis that we have extremely at a premium right now. And I thought we were actually gonna sweep the all-time high when we were rallying up month after month on the NASDAQ at this portion of price. So going down to the weekly chart, we essentially have the same thing. I validated this as an inversion fair value gap last week because we closed below the fair value gap, right below the BC. So this to me became an area that we could have used as some sort of resistance for lower prices, and I was looking for that actually, but we didn't get that. On a daily chart, we can see the same thing. I did mention how I wanted to see if, since the NASDAQ is the stronger of the two sisters, I was willing to see the NASDAQ trade into this inefficiency, this sell side inefficiency, this sell side imbalance, sitting here, the CB. I was looking to see if we could trade into it and then reject lower, but we can see that did not happen. Day after day, we just opened and started trading higher, opened and started trading higher with gaps occasionally. So again, just like the mini S&P 500, we might come for this swing high, and I might be considering the NASDAQ as the one to buy up into that swing high than ES, of course, because it's the stronger of the two. I'll be looking for the exact same concept as I've already mentioned, which of course is the 2022 model, but using the sessions instead. Look for a liquidity sweep after having the Asia session or London session. If we sweep the lows during London, I'll look for an entry into a higher time frame, or wait for a lower time frame market structure shift to take price higher. It's as simple as that, and that's all I will be looking for to take any trades in these markets. But of course, as I said, long term I'm still bearish on this, and I'm looking to see if the E-mini S&P 500 can sweep those highs before returning back down. So if that happens, especially on the NASDAQ, we can have one of the better looking market maker sell model. So of course, as I mentioned, we might get something like this, a new high, displacement lower, return to it, and then continuation. The reason I consider this to be one of the better ones is because we have the initial consolidation very visible here, and then of course when the structure finally shifts, we might get something like so. Coming back to this, then of course, as I've been covering for the longest of time, I'm looking for more sell side to be taken. Short term, intra-week, this is what I will be looking for. So that's all I have on the NASDAQ, and at this point I'm done with what I am looking for the week ahead, and I'm done with what has happened in the week that has passed. So from this point in the video, I'll be covering most and not necessarily all of the cross pairs, or you might call them exotic pairs, and the ones that I'll be looking to trade next week. Before I do start, the ones that I've flagged purple, as you can see, these 1, 2, 3, 4, 5, 6 are the ones that I'll be paying more attention to than the rest. The rest, I might trade them intraday, intra-session, intra-week, of course with the same 2022 model that I've already highlighted using the sessions. But these purple ones, I might leave them for the whole week or the whole month or even beyond that. So let's start off with AUDCAD. On the monthly chart of AUDCAD, we can see that we got a liquidity sweep here. We swept this sell side and did not close below this sell side. It's a quick turtle soup, so we can consider this to be a turtle soup. And we're actually seeing a rejection to the upside. We're not seeing price respect any PDRAs yet to the downside, and we can consider this to be a turtle soup on a higher time frame. Of course, we can see the exact same thing happen here previously, turtle soup and rejection to the opposite direction of liquidity. So let's try and narrow it down to lower time frames. On a weekly chart, we can see the exact same thing, a sweep that was very quick and a rejection to the opposite direction. We even created a fair value gap here in the form of a buy side imbalance on the weekly time frame. So narrowing down even more and going to the daily chart, the daily time frame, we can see that bullish PDRAs have been respected. In this case, we got the bullish order block being respected. We bounced off of it, moving to the upside. We created a fair value gap in the form of a BC, respected it, moving to the upside. The same happened here, but it's a more quick rejection from the BC, which we consider to be an IOFED, an institutional order entry drill, and we're expecting bullish PDRAs going to the upside on the daily chart. So I expect a continuation of that next week, targeting this swing high as our buy side liquidity or our buy side target For next week, of course, price may continue to the upside from here, but short term or intra-week, I'm looking for this buy side liquidity to be tagged. I will then consider my invalidation point being from this BC that I already covered now, and therefore, as I've already mentioned, you look for the third candle that created the BC. We have 1, 2, and 3 candles, right, that are involved in creating this fair value gap. The first one is this one, so this to me will be my invalidation point. So let's call this invalidation, right? And that's my target, the buy side liquidity. So we might see price open up and trade back into this BC one more time, maybe even the other block one more time before a continuation to this buy side. Or we might see price just continue running higher from here, rejecting and pushing higher. But either way, I am bullish in these markets, and my entry, of course, the same thing that I've already covered. Market structure shift, entry with a BC. We have the 90 minutes chart giving us an inversion there. This is an inversion fair value gap because we traded through it and closed above it. We see price come back into it and rejected off of it and now pushing higher. So that is why the swing low, well, the low that I highlighted is my invalidation point here. So we might see price trade into this and push higher, or price may just continue higher. So that's what I'm looking for on AUDCAD going into next week. The next one I have on the list is AUD Swiss. So let's switch to that. Start off with the monthly chart. On the monthly chart, we can see well, whenever I see a long wick, I always measure the consequent encroachment. I measure the wick as a whole and then the consequent encroachment. So the first thing that I did on the monthly chart is to measure the consequent encroachment, which you can see price passed through firstly and then somewhat respected it the second time. So basically I'm seeing some sort of rejection off of the monthly chart. Well, in this case it's then let's go down to the weekly chart. Okay, so same thing, rejection here. We have a CB, a fair value gap in the form of a sell side imbalance here, and we can see price just broke through it like it does not exist, making this to me an inversion fair value gap, right? So that means if price ever returns to it, I would look to see if it could be used as support for higher prices. So I am bullish so far in these markets, right? Let's go down to lower time frames and see if we could potentially see anything else. And daily chart, we essentially have the same thing, an inversion fair value gap. So price traded lower, tapping into the consequent encroachment of the monthly wick, and now supporting bullish PDRAs. So we got a closure above this level after we respected this other block at this point. Then we swept this swing high, closure above this fair value gap, making this an inversion as well at this point. So you see price just kept on rallying higher, sweeping PDRAs. We had these relative equal highs residing here. Price also swept it, pushing higher. So again, going into next week, I will look to see if we could target this swing high on a daily chart. I'm not looking for much beyond that. Of course, we might continue going into the weeks to come, but as of next week, my target is this buy side liquidity. So let's highlight it, this swing high in the form of a buy side liquidity for me. So what would I use as an entry? I have this tiny fair value gap in the form of a buy side imbalance. Let's make it a little bit more visible on a daily time frame. So I'll look to see if price can either trade lower into it, then push higher, from there sweeping this buy side, or a continuation on a lower time frame. The same session 2022 model that I've been highlighting for so long now. We might see a sweep in the previous session low. So again, assuming we have Asian session trading like so, and during London we sweep the low into a high time frame PDRA, a displacement to the opposite direction, a market structure shift on a 5 minutes chart for an entry to take it up. So we might get something like that, not ignoring this part of price. We might get something like so, trading into this and then pushing higher. So we might not even come back into this daily buy side imbalance, this daily fair value gap residing here. We might just do a quick continuation to the upside. So this is what I would like to see on the Aussie Swiss going into next week. Higher prices. Let's delete this because we don't need that, and the reason is just purely because we've been disrespecting bearish PDRA and using them for support, and bullish PDRAs has been pushing each other higher. And of course, from an even higher time frame, we saw that we are reacting off of the 50%, which is the consequent encroachment of this long tail. So we might see a possibility of us trading into these highs and these clean relative equal highs here on the monthly chart. Of course, this is the Swiss, so anything is possible, and I'm not going to be holding trade over, definitely not over a weekend, but we might hold over a day. I would prefer not to, because this week I just want to keep my trades to be within one session or one day. So let's move on to the next one, which is AUDNZD. At this point, I should mention that I'm not going to go through every single one of these currency pairs, and I'm just going through the ones that I'm going to be looking at next week. Again, I will only be intra session and intraday trading them without anything else beyond that. So AUDNZD, we have this monthly order block residing at this point. We have the fair value gap that price traded into on the 1st of February and rejected from, but we've been consolidating ever since. So I also set an alert there to see if we could possibly go into this order block at any later stage to target the sell side liquidity. Of course, we can see it's sort of range bound, but on lower time frames, which I'm only focusing on at the moment, we could see a potential trade intraday and intra session. So let's get rid of this old diagram. What really piqued my interest here was on the weekly chart. We can see at this point that we swept these relative equal highs, right, from these 2 weeks, and we didn't close above it. We immediately rejected aggressively until the weekly candle turned red, which is bearish, right? So this piqued my interest because this now to me is sort of a turtle soup. And even though we might see a continuation to the upside later, even though this might be bullish short term into this other block, then bearish later, this is a good sign to me. The fact that even though we might trade into this inversion fair value gap, this BC and push higher, I am looking to see if I can participate in the trade, in the opportunity of trading into this intra week. So let's move down to lower time frames and see what we have. We can see the turtle soup is clear on most of these time frames, and now that we're on the daily, we can also see the sharp displacement to the downside. Let's see what we have on a 9-hour chart. 9-hour charts, we can see the same thing, the same concept, a sweep in liquidity. At that point, a displacement lower, but we have not closed below a swing low yet on a 9-hour chart. So we can call this a sweep on 9-hour, a displacement lower, And looking to the left of it, we can see the only swing low that we can identify here is this one. So this would have been where our market structure shift would reside, but as again you can see, we have not closed below it. So we can set a conditional alert after labeling this as our market structure shift. We can set a conditional alert to say when we close below this level, right, that the alert should go off. So I'm looking for a closure below this to validate this market structure shift on a 9-hour chart. On a 90-minute chart and lower time frames, of course, we've gotten that already. We got the move lower, we already got a market structure shift at that point. We see bearish PDRAs are being respected and all that stuff. But with this one, I'll be paying attention on the relatively higher time frames. I'll be looking at the 1 hour, 4 hour, and as I already mentioned, 9 hour. So again, on the 3 hour, we can see bearish PDRAs are being respected, and the market structure shift, the first one I can see was at this point. So this was a market structure shift on a 3-hour chart, and fair value gap over there respecting to sweep sell side. And yeah, but longer term, I'm looking to see if we can trade into the weekly inefficiency that we already highlighted at this point. So this would be my target. Let's label it as TP, and then of course, seeing how we trade into that, we'll see if we can trade back down into this inversion fair value gap. And then if we close below this inversion fair value gap, we might be seeing more bearish prices from here. But so far, I like this signature of a quick rejection as a turtle soup. Of course, my invalidation point would be that high if that's the case. Yeah, that's all I have. We can see the TP is residing at these lows. From this consolidation point, we have these relative equal lows there. So that's why I'm targeting. Nothing too far and nothing crazy, but I would really like to see if we could trade back into this inefficiency on a 9-hour chart. That would be nice. I would take this trade, and my stop loss obviously would be here because it's the third candle that created the fair value gap. The CB stop loss would be here. No need for the swing high, but yeah, it'll just be here. Then see if we can target these relative equal lows. The next one on my list is CAD Swiss, CADCHF. So this may not be the cleanest chart though, but I was interested in seeing how we close because I thought we were gonna go for the sell side liquidity. Why I don't like these charts, especially on the daily time frame, is that we had relative equal highs that I highlighted, and I thought we were gonna reject from one of these PDRAs to the upside, but we dug so deep into it without even sweeping liquidity, without sweeping sell side. So seeing a reversal from here to sweep the equal highs is not really the best signs or signatures that I would like to see. But if we were only looking at this portion of price, looking at this point, when we closed above this fair value gap, right, we got this fair value gap in a CB, in the form of a CB, we might have been looking to sell this pair from this area. But then look how we closed above it at this point and created an order block in a way, and then saw a continuation to the upside from here. So we basically closed above it, traded into this inversion fair value gap, because now this is qualified as an inversion fair value gap, right? So closed above it, next one we still close above it, the next candle we traded below into the inversion, and looking at the consequent encroachment area, we can also see a tiny buy side imbalance there, a tiny fair value gap there. So I would have probably taken this trade when we got into this area, stop loss being at this candlestick's low or even this low, because I wouldn't be that confident in it, and then saw a rejection to the upside, to the point that even the next fair value gap, the next CB that we have, we closed above it again, considering qualifying this as a valid inversion fair value gap. We traded below into it, not creating any fair value gap, but traded into this that I would consider a valid order block, right? A valid bullish order block. So let's say we have that residing there, rejected from it, and look at the high of this candle up there in the corner. The high of this candle is 0.65575, and then the low of this candle, again looking up there, low of this candle, 0.65575. so we got an immediate rebalance, an immediate rejecting off of this inversion fair value gap. We immediately traded into it, filled it 100% to the tick, to the pip, and then now seeing a rejection to the upside. So this is also what I was interested in. Yes, we didn't get the liquidity sweep that I would have liked, but I like how bearish PDRAs are being used as support for higher prices now. So I'm also going to flag this CAD Swiss as one of the trades that I'll be paying attention to going into next week. So now let's move on to the lower time frames to see if we could find a possible entry. On a 9-hour chart, we can see the same sort of order block idea, 100% fill of this imbalance, a closure above this CB as well on a 9-hour chart. Let's delete this lower one because we're paying attention to this area. 4-hour chart, we can see a respect of this buy side imbalance and a rejection. So if I was to take this trade going into next week, I would even narrow down my invalidation point to be the swing low. So my stop loss would theoretically be at this swing low. Looking for an entry though on a lower time frame, looking for a discounted price to take this on. I probably would not wait for a deeper discount than what we already have right now. I probably would just take it going higher. If I wanted to wait for an entry for a discounted price, I might wait for this 90 minutes fair value gap in the form of a BC residing there, and I might take this going higher. Of course, many of you that are already able to notice the 2022 model can easily see this was a liquidity sweep or a turtle swoop, displacement to the downside, market structure shift happened there, and fair value gap there. So many of you might be looking to see if we could sell this from here. And yes, I won't be against that. It's a valid entry, but we've dug so deep after displacing lower, and we respected this last down close candle as a bearish breaker. Remember, I said I have multiple entry reasons, so this could be a bearish breaker that we respected here. Notice how we finally closed below this area at this point. So we closed below it, rejected quickly, this candle came up into the breaker and then displaced lower. So the 2022 model in quotes in this case might have already played out, because now we're seeing a rejection from here and prices looking bullish again. So this might not be the one that I'll trade as a 2022 model to take it down, but I might consider this one going higher, or again, as I've already said, when market opens, I'll just jump in on market, put the stop loss there, and that's it. Leave it to run. Let's see if we have anything on lower time frames. On a 30 minutes chart, we saw an immediate rejection there when market was closing. So we might see a possible push into this area before a continuation to the upside. The lower time frames on these charts might not be the clearest to trade with, but I will be paying attention to 90 minutes, 1 hour, 4 hour time frames. And yeah, I'm looking for higher prices on CADCHF. The next one I have is CADJPY, CADJPY. The same idea. I'm not gonna be on a higher time frame, but I'm looking at the same idea here, sort of intra-week. So here we got an expansion to the upside. We got a tiny CB there, a small inefficiency there, and it's in a form of a sell side imbalance, right? And we can see market clearly closed above it on this day, Tuesday, validating it as as an inversion fair value gap, right? The small CB, but we are not going to look at that, so let's just look at the BC instead. So we can see the BC was created on Thursday, got a retracement into it and a push to the upside, right? So why might I be bullish in this market? I'm looking at these highs here. They feel too clean for me to consider to leave. Of course, I might not be targeting the buy side liquidity there, but I'm looking specifically at this buy side liquidity inside here, the internal liquidity. So let's highlight this as our buy side liquidity. And I like how PDRAs are being respected to the upside. Also, when you measure the range from Wednesday, which you can consider an order block because we closed above it at this point on Thursday, we can consider this to be a bullish order block. Look how price traded into the mean threshold, the 50% mark, and rejected from it, right? Of course, we got a little more hawk there, but we rejected from it and looking to trade higher. So I like those signatures in price, and I am also bullish here, targeting these relative equal highs up there because of current market structure. Nothing long term, but simply intra-week view. 90 minutes charts, the same idea. We've already rejected from a higher time frame PDRA. Let's just take the 4 hour for example. We got the 50% mark respected inside of a 4 hour BC. So if I was to put an invalidation point, I'll probably put it at this swing low here from Friday 3rd of November 5 o'clock on a 4 hour chart, or I would put it at the low, candlesticks low that created the fair value gap in the first place. So this is the proper invalidation for a fair value gap entry, targeting this buy side liquidity. And that is what I'm looking for on CADJPY. Of course, this might be one of those trades where you just enter on market open, put your stop loss where it needs to be, and look for the opposite direction to be targeted. So next up we have EURAUD, EURLZ. I'm gonna start off on a 9 hour chart here. So initially I was looking at these relative equal highs residing at this point, right? And I saw how price was essentially forming a market maker buy model. We had the initial consolidation there, an expansion, then now we got the push high, the displacement, looking for a continuation. So at this point I was looking to see if we could react from this BC to trade higher and clear these equal highs, maybe react from this fair value gap, right? But now we are rejecting the opposite way, and honestly I'm not liking that. I would not be able to trade this to the downside with confidence unless, of course, I'm trading within the session or within the day, looking for the simple 2022 model. But ultimately I was looking for these relative equal highs to be targeted, so I don't like that we are trading this low right now. I would prefer to see a push to the upside, invalidating or disrespecting bearish PDRAs. So this, for example, I would like to see this act as support, so break through it, come back into it and push higher. This is what I would like to see on EURAUD, but we might not be able to get that. So but I'm not going to force anything either way. I would focus mainly on the 2022 model on any time frame. But again, I've already mentioned that I prefer to see the 9 hour, the 90 minutes, the 1 hour and the 4 hour. But yeah, I would prefer higher prices in this market. But if lower prices are what we get, then yeah, so be it. We'll target this sell side liquidity and this relative equal lows residing at that point. But what do I favor? What am I biased to trade? I'll prefer to trade going higher into this buy side, into these equal highs. Yeah, that's all I have on EURAUD. Next one we have is EURCAD. We can already see somewhat similar structures in these charts. I'm also looking for higher prices here, and I would actually prefer to trade EURCAD because we have these relative equal highs. I think they might actually be perfectly equal. So let's look up there and see. This candlestick's high is at 1.51148, and this candlestick's high is 1.51131. So technically this high is higher than this one, but I'll consider them relatively equal. So going down, you see that I put this inversion because it's on a lower time frame, I think on a daily chart, but even on a weekly chart, we can see this fair value gap from this candlestick's low to this candlestick's high was invalidated. We closed above it and we could use it for higher prices, right? So I'm paying attention to that. We have this buy side liquidity here, this high, and ultimately, as I said, we have the relative equal highs up there. So going down on lower time frames, actually let's start with the daily. We see the inversion fair value gap I was looking at. Let's actually clear this turtle soup that was missed down there. We have this inversion fair value gap because we respected it here. Yes, we displaced lower, and then at this point we closed above it. I mean, we traded to fill it, still didn't close above it, and this candle we finally did. So when this one traded into it, I would have been taking the opportunity to buy this back up, and then staying in the respecting of bullish PDRAs. We have this order block, this last down close candle, respected as a bullish order block to push higher. So going into next week, same as always, I'm looking to see if we can trade into a discount. In this case, I'll just look for this fair value gap, this 9-hour fair value gap, to possibly give us an entry to support for higher prices. So that's all I'm looking for here, but my main target is on the weekly chart where we have the relative equal highs. Looking for these relative equal highs to be tagged, and I'm looking for bearish PDRAs to be disrespected and a continuation to the upside. So yeah, that's all I have on EUROCAD. On Euro Swiss, we can see that it's I even marked it blue because I don't even wanna check this chart out. I don't even want to check Euro Swiss. It's just a grind in this chart. I can't really figure out direction here. The only way I'll be able to trade this is within a session or even micro sessions, but nothing above that really makes too much sense. Of course, on a daily time frame, we could see a possibility, if we are still bullish on the euro as a whole, we could see a possibility of targeting these highs, and yeah, we could see a possibility of targeting these highs. But right now, I don't really want to trade this, so I'm not going to touch Euro Swiss at the moment. But when it's not doing funny things, we are able to capitalize in these markets and make some money intra-day, within one day. EURNZD is the next one that I'm looking at. On this, let's see if we can start off with the weekly chart. The Fibonacci that I have here will make sense in a moment, but I'm also looking for bullish prices on EURNZD for the same reasons. 2022 model, we got a liquidity sweep. This week was sweeping the last 2 weeks as a turtle soup to the upside, and we got a continuation disrespecting this bearish PDRA aggressively, and now we have traded back into this weekly BC, almost filling the whole thing up. But since that's the case, I decided to go on a lower time frame. In this case, I went to a daily chart, and we can see, measuring this Fibonacci from this swing low to this swing high, we can see that the OTE entry, the ICT OTE entry, the 61.8 retracement, or the golden zone, which is the 68.4 retracement, are residing here. And I don't think I would consider it coincidence that we are also trading inside of this daily fair value gap, which has an order block. So I'm going to possibly have 2 entries on this at this point and this point. So my reason for entering in this chart is purely because of the OTE residing here, the order block and fair value gap sitting over there, and looking for these highs to be swept. Nothing crazy, nothing fancy in this market, and I'm going to say that I'm bullish here because also we have relative equal highs from where we just came from. So this is what I'm looking for on EURNZD. I also marked it as one of the ones that I'll be paying attention to for the week ahead. The next one on my watch list is EURGBP. This is another one I'm actually paying attention to right now, even though it's not the best to be trading. We got a liquidity sweep here, I believe last week on the 31st of October, a displacement below, a retracement back into the range, and a continuation below. On lower time frames, we can also see that we've got a fair value gap being created here that could support lower prices. The problem with this, and why I might not be trading it, why I'm probably not going to be trading it, is purely because of the higher time frame. So when we go up to, let's say, the weekly chart, we can see that we are in a weekly buy side imbalance, and we just filled it up completely last week. So we might see a continuation to the upside, or we might see a closure below this BC. Then I could consider that to be an inversion for next week. So of course we respected the CB here to push lower, but I'm not sure if this would be a continuation up, or if we close below this BC then becomes an inversion. So I'll set an alert here, a conditional alert for when we close below. So once we close below this BC, then I would consider it an inversion that could possibly take us down to this swing low, and we can see if we'll aim for these sell sides down there. But right now I will remain neutral in these markets until or unless we get some sort of clear intra-session trade idea of some sort. But right now I'm not going to be touching anything here. Next up we have GBPAUD. I'm almost done with all these pairs, with the ones that I'm looking at. So GBPAUD, you can already see from my arrow what I'm looking for. But let's start off with the weekly chart. I'm paying attention to this because of how we are respecting bearish PDRAs and actually rejecting off of them. So looking here, we obviously got a massive push to the upside, rallying. And then at this point, we started displacing lower, taking previous lows, and price came back to it, respecting the CB so far on a weekly chart and still pushing lower. So going to lower time frames, like let's say the daily chart there, we can see the same idea basically. So let's delete this for now. You can see the same idea. We got a liquidity sweep at this point, a total soup, a quick sweep in liquidity, so that's a total soup to me. A displacement immediately after that, the next day, right, which was on a Tuesday. We got a displacement there. So Tuesday created the high of the week, displacement below, creating an order block there from Monday, came back to it, respected that, and now I'm pushing lower. So basically bearish PDRAs are being respected. We have this sell side liquidity residing here, an internal sell side liquidity that I'm actually targeting for next week. So let's mark that out as our sell side, and of course we might see price pushing lower to this sell side. So for now I'm looking at this, and in this area we have the fair value gap, obviously, that we just reacted from, the CB that we just reacted from, and we also have the order block at that point. So I'm looking at those two areas for a rejection. So let's put this here, and I want to see that happen. So we might also just respect this order block. Who knows, Tuesday might open up, see the high of week inside of this order block, and then a continuation to the downside. But ultimately I'm looking for this sell side liquidity to be tagged after sweeping this one. So this is my view on GBPAUD, and I'm actually prepared to take this because it's one of the cleaner trades that I see out of the majors, or out of the ones that I've already covered so far. Next up we have GBPCAD. I don't see the need to really go on a higher time frame here, but I'm still going to do it to explain my thought process, my mind. set going into this market. So we got a sweeping liquidity in these lows 1 and 2, and now we're getting somewhat of a displacement to the opposite direction. This CB was respected once before because we did not close above it, and now we can see the previous 2 weeks we closed above the CB, making it an inversion fair value gap. Let me highlight where the CB is. We did not react from it yet, but if we do tag into this inversion fair value gap, we also have this area here, this small area being a buy side imbalance. So we might tag into this and push higher, because we're still inside of this CB right now, and this could push price back to the downside. But ultimately, I'm looking to see if we could remain bullish in these markets, because we just came out of a massive consolidation here, just broke out of it finally. I would like to see if price can continue respecting bullish PDRAs the same way it's been and push to the upside. So here you can already see my illustrations from a lower time frame that we got a liquidity sweep, a market structure shift, and a displacement to the upside. This inversion fair value gap is possibly from a 1 hour chart. There we go. 1 hour chart, we got a sweep, another sweep down there. Let's put that we can actually call this a total sweep, because the sweeping liquidity was quick, was within 2 hours. Then a massive push to the opposite direction and a continuation from there. So if price was ever to come back into this inversion, I would consider it. That's why I said the alert there. If it continues to the upside without me, then I'm not going to really bother myself. Also, when you measure this area to there, we can see that this fair value gap, right, this BC fair value gap here in the form of a buy side imbalance, is also below the 50% mark of this range. So if my price can ever come back into this area, I would consider that to be a discount for me to take price higher. So yeah, that's all I'm looking for on GBPCAD. Another one I find interesting is the Swiss franc with the pound. So GBP Swiss, GBPCHF. This was actually brought to my attention by a friend of mine, and well, he was bearish in these markets. He wanted to see if we could take price lower from this sell side imbalance, this fair value gap here. But I was seeing a power of 3 essentially. I see an accumulation there, and then I see a quick Judas swing to the opposite direction, and I'm expecting price to continue higher, right? But primarily initially to these equal highs here from the consolidation, and then of course we'll see if we can target these buy side liquidities up there. So moving down to lower time frames, we can already, well, I set this alert here because I wanted to see if price could come back down into this other block on a daily chart, which I believe confluences with a few other PDRAs on a higher time frame, and I would like to see if we could come back to it and push higher. So let's go down to the daily and look at it for a moment. On a daily chart, we also see that we are closing above sell side imbalances and making them to become inversion fair value gaps. Let's just delete these for now. So here we can see price this candle closed above it. So when price came back into it, I could have considered this to be an inversion fair value gap that could possibly take price higher, and we can see price rejected from this area and pushed higher. I believe I was actually positioned in this trade, but I haven't checked it out in a while, so I'll have to monitor it soon. So next week, what I would like to see, what would be ideal, is that we open on Monday like so, and then on Tuesday coming into this potential fair value gap with an order block as well. So I would like to see if price could come on Tuesday, trade into this, and then push higher into the consolidation, the high of the consolidation here, these relative equal highs. But of course, I'll monitor it closely to see what it gives us. But this is what I would like to see. This is what I would like to see. and what would be ideal, because also it allows the stop loss placement to be valid. So let's get rid of this, and that's all I'm looking for on GBP Swiss. The next and last one that I will be covering in this case is the NZD with the Canadian dollar. Of course, I'm not going to look at all these extra stuff down there, but I'll be looking at the NZDCAD. The reason I chose this was because firstly I said I was not going to focus on the dollar index, on any pair with the dollar for this week unless we get something solid. But of course we can still apply the same concept, the same 2022 model, intra-day, intra-session. I'm just not going to be putting most of my attention on any pair with the dollar on it. So yeah, we can see that we swept the sell side that we were looking at the previous weeks on the NZD-USD, NZD-JPY. We can also see sort of the same reaction, a sweeping liquidity and an expansion to the opposite direction. We also have the same on NZD Swiss. So I'm going to be looking at NZDCAD for two reasons. One, we are very close to sweeping this buy side liquidity here, the swing high. And then two, we have this massive trend line, right? So retail might be considering this to be a trend line that they expect price to hit and push lower, right? But I'm looking at it as a target for me. We already started meandering at this level, struggling to push lower, and at this point we can see that this swing low is lower than this swing low. We are now showing signs of bullishness. So I target these trend lines. I target this. I consider them to be low resistant liquidity runs. ICT calls them phantom trend lines. So I'm looking to see if price can just break all of this and basically push to the high of this, the beginning of this trend line. So I'm looking to see if price can trade up to that point. This is what I'm looking for on NZDCAD. So of course I've already made it clear that I'm looking at this inversion fair value gap, the CB that turns into an inversion there, to be used to support price higher. So when the new day candle opens and of course maybe Tuesday candle opens, we can trade lower into it and push higher from there. I'm not looking for anything extra beyond that. Nothing too dramatic. On lower time frames, we have the same idea. Order block, consequent encroachment of the inversion fair value gap, and I will still be considering the same 2022 model, intra session and intraday. So I might look at something like this, for example, and consider it to be a mitigation block, which is inside of this inefficiency, which is also around the 50%, the consequent encroachment of the daily inversion fair value gap. So yeah, I could look for an area like this to see if we can get opportunities to buy NZDCAD. So that's all I have for now. I've already went on and on for more than an hour, almost an hour and a half. I will, of course, I did not highlight this already at the beginning, but I will also be looking at markets like the oil. If you've been following me for some time now, you should know that I'm long-term bullish on the oil. I don't believe that we should be as low as we are right now, and this is from previous videos that's been made when trading the oil live, I believe. So yeah, I'm still long-term bullish on the oil. I don't believe that we are at a low. We're supposed to be this low right now. So I also looked at this weekly order block inside of this fair value gap, and I was looking to see if we could use this to take price higher. I also looked at the 9-day chart and how we perfectly came down to this order block here and rejected from it, and now we returned back to it again. So I don't believe we're going to actually take out this swing low, the one that created the order block. So this to me would be considered an invalidation. And yeah, I'm looking to see if we can trade higher from here. Same concepts as always: 90-minute charts, 1-hour charts, 4-hour charts, and possibly 9-hour charts if I'm not going to be paying attention to it. I would wait for a liquidity sweep, displacement to the opposite direction, an entry there with the 2022 model to see if I can take it higher. The difference is that I might not be taking any sell opportunities here on the oil, and I'd rather look for buys. And since I'm looking for buys, I take the stronger of the two sisters, which is UK oil. Look at US oil, you see the gap there. This is WTI. And then look at UK oil, we see the gap is lower. We are just only now coming back into the gap, and I don't believe we've even filled it up, because looking at the last candle there where it started, and then look to the right of it, we can see we've not even filled the gap. On US oil, we've already filled it and even traded below it. So since I'm bullish on oil, I'd rather be buying UK oil than US oil. So that's what I'm looking for here. It would be nice to see a massive push to the upside and sweep a swing high like this one, so we can see a possible entry to take it up. So that's what I'm looking for on oil. I don't believe there's anything else to cover. I've already covered the dollar index, I've covered the indices. I'm not touching gold, I'm not touching silver, not touching any of these for now. I've already covered the majority of the cross pairs. I am not covering everything, but I've covered most of it. If there's anything else that I have not covered, or if there's any specific pair in indices or anything at all, any market at all that you'd like me to cover, please let me know in the comment section. I will make sure to attend to every comment that I receive. And yeah, that's all I have for now. Enjoy your weekend and make the best of next week. So for now, good luck and good trading.